Hi there, good morning. My name is Victor Aluyi and I'm the head of investments at Sankore Global Investments. This is your weekly financial markets roundoff. We start off in the US where stocks closed lower on Friday to end the week that's been marked by a rotation out of mega cap stocks. The S&P lost 0.71%. The Nasdaq was down 0.81% and the Dow shed 0.93%. We also saw the Russell decline by 0.6% Friday as well. However, for the week, the Nasdaq and the S&P lost 1.97 and 3.65% respectively, marking their biggest weekly loss, since April. The Nasdaq also snapped a 6-week winning streak by this performance of last week. On the other hand, the Dow added 0.72% for the week, while the Russell gained 1.68%. The week has largely been, marked by a move away from, large cap tech stocks that really had outperformed very strongly up until now into other areas of the markets. Sentiment has also been boosted by expectations of a September rate cut. This typically will be supportive of smaller names and also cyclical names. So this has proven very strong in the sort of move that we saw last week in the markets. Also last week, over the weekend, basically, on the political front, we saw President Joe Biden drop off from the presidential race, nominating Kamala Harris to take his place. This is a very momentous, development, and certainly would have an impact on, sentiment and even markets generally going forward. Really remains to be seen how this will be perceived by markets. Our expectation really is that this was a move that, was expected in certain quarters, really. So the impact might not be really, really significant. I think the question really is around, how Kamala Harris, for instance, squares up against Donald Trump if she does get the ticket, and if the Democratic Party actually does, rally round her. For the remainder of the week, a couple of, economic reports will be expecting. Q2 preliminary GDP report should be out this week. Also, the PC inflation number will be out this week as well. Earnings will continue this week. About 20% of S&P companies are, slated to report, this week. So that is something that would, keep an eye out for. So for the remainder of the week, really, it's obviously going to be development on the political fronts and, the economic data that we're looking to see, and also earnings. These are the things we believe will be impact market performance for the remainder of the week. Over in Europe, the ECB held its policy rate steady at its meeting last Thursday after implementing a rate cut in June, basically citing the fact that price pressures were still persistent. I mean, the decision keeps the benchmark rate at 3.75%. This was a widely expected move as concerns over inflationary pressures, particularly from the labor market, really continues to weigh. Headline inflation in the Eurozone dipped to 2.5% from 2.6% the previous month. Concerns, however, continue to remain over the core CPI number, which came in at 2.9%. In a statement released by the Governing Council of the ECB, it said it will basically continue to monitor the rates and monitor the data, and was really not, pre-committing to a set, rate path. So obviously, the rate path would be largely data dependent. Nevertheless, the market is pricing in, 2 further rate cuts this year. One in September, a pause in October, and then a further rate cut in December. Again, this will largely be influenced by the inflation trend that we see, going forward. Also in the UK, inflation held steady at 2%. This was slightly above analyst expectation of 1.9%. In spite of this headline figure, service inflation remains really high at 5.7%. The market had expected a rate cut in August as headline inflation had, started to show signs of sustained easing. However, this service inflation number remains a really, really key concern. The BOE's interest rate has stayed at a 16-year high of about 5.25% since August of last year, when inflation was just around 7.9%. Again, the trend in that service inflation will prove very crucial in determining what the BOE does going forward with rates. Back here in Nigeria, the fixed income market, treasuries market, was largely bearish last week. We saw significant sell-offs, particularly from offshore investors. We saw inflation last week, which continued to grind higher. So that created some bearish sentiment in the market. The central bank tried to conduct an auction last week, essentially to try and attract some foreign portfolio investments, but there was a no sale, so they didn't really get much interest from the foreign investors this time around. Also in the bond market, it was largely cautious and basically tilted towards being really bearish. There was a lot of caution really because I mean, there's a bond auction today. There's also the MPC meeting happening today and tomorrow. All of this is coming on the heels of a sustained weakness in the naira, and also higher inflation from the last meeting. So all of this is creating a lot of caution and creating a tilt towards a bearish sentiment and the expectation that rates might go higher. We expect that the Monetary Policy Committee is likely to hike rates between a 25 and 50 basis points hike. We don't expect anything that is very, very aggressive compared to the last couple of months that we've seen. So we think that this time around, we're going to see a 25 to 50 basis points hike, really in response to the further rise that we have seen, in inflation. So obviously the outcome of this bond auction and also the outcome of the Monetary Policy Committee meeting would certainly be setting the tone for the medium term within the fixed income market. So that's pretty much it for our market roundoff. We hope that you have a very, very productive week. Thank you very much.